I think that many will sell tax season March and then get trapped out.
Mm-hmm.
And then they'll expect an early peak, and maybe it does peak. From my liquidity work, it still suggests that it peaks at the end of the year, towards the end of the year. But it depends what happens to liquidity. We look at the business cycle using the ISM survey. It's below 50, which means the manufacturing is still contracting. Even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to that tends to be a rolling top, and crypto tends to have a rolling top around that.
We are entering an exciting and crucial phase in the ongoing cryptocurrency bull market, which Real Vision CEO Raoul has aptly named the banana zone. This phase is in full swing, and market sentiment is high as Bitcoin, the largest cryptocurrency by market cap, currently trades above $100,000, with expectations of further gains in 2025. In a recent conversation on the New Era Finance podcast, Pal, a well-known macro analyst and former Goldman Sachs executive, highlighted key dates to watch in 2025, particularly periods of extreme market volatility. Pal also addressed the frequently debated question of when the market cycle will peak in 2024. There has been much speculation, with analysts comparing this cycle to previous ones to predict when prices might reach their high before the transition to a crypto winter. While some believe an early peak could occur around mid-2024, others, including Pal, suggest the peak will happen much later. During the interview, Pal also discussed the intersection of macroeconomic factors and the crypto market, explaining how these forces could either accelerate or slow down market trends as we approach 2025.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
The issue is people have this anchoring bias on price. So they think 100 is more expensive than 1. But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number, look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make a million X returns. The world doesn't work that way. Bitcoin is really the anchoring for the whole space. And over time, right, this space is a $3 trillion asset class today. If I extrapolate the trend rate of growth of adoption or price or market cap, you get to somewhere like 100 trillion by 2034, 10 years. So we're only 3% of that journey. So is it expensive or not expensive? It's probably very cheap. And at every point, and I've been around this cycle, I've been in crypto since 2013, everybody thinks, oh my God, I'm paying the high. And when you look back, when I paid the highs at 200 back in, well, it actually went up to 1,000 and went back down again. Back in 2013, I'm like, I paid the highs. And then I look back now and it's 100,000. That's the thing about exponentiality. People don't understand. They see the cyclicality, but they don't understand the secular exponential trend.
How long can it still go up as fast as it went? Like at some point you've got the exponential curve and your yields will just go down along with it, right? Because markets expand, markets keep on expanding.
Yes. So for Bitcoin, that will become a very real thing earlier. Mm-hmm. But for the entire space, if it's going to 100 trillion and it's only 3 trillion today, will Bitcoin dominance be 50% of a 100 trillion market? No. Where will it be? Where will it settle as an asset class? We don't know. But let's say it'll have the equivalent or larger than gold whenever gold is at that stage. So let's say it's 30 trillion. So there's the 70% that's going to make an extraordinary amount of money. I think the S-curve applies to the whole space overall, but the returns are still relatively high to come because we're still pretty early in most of this. And we see that over time. So Bitcoin's returns are coming down. ETH was higher, still is higher, but it's coming down. Solana's higher, but will come down next cycle. Sui or whatever's coming up this cycle, it will still have a couple of acceleration cycles, then it slows down. But what are we going to argue about? That the returns have gone from 150% a year to 60% a year? I mean, this is la-la land in finance, right? Nobody gets given these opportunities. What is a harder thing is why even start a business? Because I don't know almost any business that consistently generates between 50 and 150% a year returns. And you actually don't need to do anything. You just need some capital.
Raoul Pal often refers to the cryptocurrency and digital assets space as the biggest macro opportunity, viewing it as a transformative force in global finance and technology, comparable to the early days of the internet, but with even greater potential. He stresses its exponential growth driven by network effects as more individuals, institutions, and developers embrace it. This rapid adoption is giving rise to entirely new financial ecosystems, such as decentralized finance and tokenized assets, which he believes have the potential to disrupt traditional industries. Pal also points out that macroeconomic factors like rising debt levels, inflationary pressures, and low interest rates make crypto an appealing alternative to fiat currencies and traditional financial systems. Bitcoin, for example, acts as a hedge against inflation and currency debasement, while Ethereum powers the development of Web3, smart contracts, and decentralized applications, laying the foundation for a digital revolution. He predicts that the cryptocurrency market will soon reach a $100 trillion market cap, marking the fastest growth of any asset class in history. To avoid missing out on this massive opportunity, Pal advises keeping an eye on key dates in 2025 and beyond.
Ask most people who were in last cycle, and that was their first cycle, they have tremendous PTSD. Because they looked back on the 2017 cycle, and 2017, the market peaked in March before tax season. It then corrected, so it peaked at 2000. It then kind of corrected, and then it went up. It went up 10x in 4 months.
You had the China correction in between as well.
So last time, I also thought, okay, we saw the tax season correction, then the rally back up. It was a big correction, down 50.
Mm-hmm.
Then it shot up, and it's like, okay, it's going to be 2017 again. And it wasn't, because the central banks would start to withdraw liquidity, and the business cycle had been brought forward by the massive liquidity was starting to come away, and that was the end of that. So this time, when you go on X and you see people, they are so PTSD'd by that I think that many will sell tax season March and then get trapped out.
Mm-hmm.
And then they'll expect an early peak, and maybe it does peak. From my liquidity work, it still suggests that it peaks at the end of the year, towards the end of the year. But it depends what happens to liquidity. But if that is the case, I just think the risks are here. And then the risk is 2026 is the people who then sold out, maybe they screwed it up and maybe they got out like I did in 2017 way too early. You then try and buy it back, and you end up buying back at much higher prices, which is what happened to me. I ended up buying back in COVID in that crash, and I got in at 6,500, but I'd sold out at 2,000. And I'd done the job. I sold out into strength and bought into weakness. Difference was, in a secular exponential uptrend, the difference between that peak and that trough was like this.
But is the macroeconomic framework going to push Bitcoin and crypto further ahead this time than in the previous cycles?
We can't tell, because liquidity is actually the dominant factor.
Mm-hmm.
So right now, we look at the business cycle using the ISM survey. It's below 50, which means the manufacturing is still contracting. So, okay, we're nowhere near tightening financial conditions. They did tighten because the dollar went up and rates went up, but the Federal Reserve and the governments need to change that because we need liquidity in the system. So even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to that tends to be a rolling top, and crypto tends to have a rolling top around that. So I think it's longer than people imagine. So it's later in the year, because people are so scarred by last time around again. And if I look at it on a probabilistic basis, when we took off so aggressively in 2023, I'm like, okay, look, there is a chance that we front load the cycle. But then we had a 8-month correction, and that kind of put it back on track. And so therefore, I think we've got two odds now is, does this look like a more normal cycle? What that means, I don't even know anymore, but let's say 250,000 Bitcoin.
Mm-hmm.
Or do we get something like 2017 and 2013, which is something a bit wilder? And I think the probability has gone up for me of that. But, I don't make predictions on this stuff because it's pointless and you just get trolled on the internet for making predictions. But probabilistically speaking, from what I know today and what I know about liquidity and the regulations and everything else, the probability is that we're going to get a more violent upside cycle with lots of volatility in the middle. Like, liquidity has been falling for 2 months now, 3 months. It's fallen quite sharply. And that's whether you use Global M2 or whether you use our Global Liquidity Index, total liquidity that we produce at Global Macro Investor. It maps really well on Bitcoin. Now, these correlations don't last forever in a perfect form, but it's been perfect. And it would suggest that the market peaks sometime December, end of the year, early Jan, and sharply corrects, which is exactly what happened last time Trump came in.
In related news, PAL is eagerly anticipating altcoin season, the next phase of the banana zone, where altcoins like Ethereum, Solana, and others are expected to surge and outperform Bitcoin. He believes this moment is nearly here and expects Sway to lead the charge in outperforming the rest of the market. In a recent tweet, the Real Vision CEO shared his outlook. Sway, Solana, nice clean break. Sway should outperform for the rest of the bull market. I own both and think both are fantastic in different ways. Solana is lower risk. Do you share PAL's optimism about altcoins like Ethereum, Solana, and Sway? What other cryptocurrencies do you think will shine next year? Drop your thoughts, comments, and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.